Welcome to the weekly market wrap-up. I'm Hannah Bernard. Wall Street's early year stumble is over and the U.S. stock market is back in black for the year. After the worst three-day start to a year since 2008, markets began to bounce back on Wednesday, and in a stunning turnaround on Thursday, the Dow Jones Industrial Average surged more than 300 points, wiping out its losses and climbing back into positive territory for the year. How did the rest of the markets fare? Let's find out. It was a troubling start to the week for the markets on both sides of the border. The Dow was hit hard, losing a total of 460 points over Monday and Tuesday, but boy did it rally, adding 536 points over the past two sessions, finishing Thursday up 1.84% to close in the black at 17,907. The S&P 500 also staged a powerful rally, adding 1.79% in overall value on Thursday to close at 2,062. And the Nasdaq made it a hat trick, also clawing back into the plus column with a 1.84% overall gain in value to close at 4,736 on Thursday. Now let's turn to Canadian markets, which also mounted a rally after taking a terrible beating earlier in the week. The Toronto Stock Exchange Monday was slammed, plunging a whopping 400 points in a single day of trading. By Thursday, the TSX did manage to erase about half of its losses, posting 2 days of back-to-back gains with a 172-point bump on Thursday to close at 14,457. The TSX Venture Exchange also managed to stabilize this week, though it's far off from a full recovery. It posted a 3.83 gain to close Thursday at 687.48. So what has been causing all of the instability? Plummeting oil prices are of course a top factor. This week, oil dipped below $50 a barrel for the first time in 5.5 years. At its bottom, February crude hit $47 a barrel this week, though prices did stabilize and edged back up to close at $48.92 on Thursday. Also putting heat on the markets earlier in the week are the continuing concerns over the European economy and the potential that Greece could back out of its international monetary agreements following a national election later next month. The euro has been sliding against the US dollar for much of the last 12 months, and this week it fell to a 9-year low after the European Union published particularly bleak economic data. There is a growing fear among investors that the Eurozone is stuck in an economic quagmire and its leaders are not doing much to pull it out. Now to winners and losers and our picks for the week. The winner for this week is JCPenney, ticker symbol JCP. Shares in the embattled retailer skyrocketed over 20% Wednesday after the company provided a performance update for the November through December sales period. JCP reported sales growth of 3.7% year over year. This is great news for a company marked by turmoil over the past 24 months. However, the news is not all good for JCPenney this week. Just a day after posting such a huge share bump, the retailer announced it's shutting 39 underperforming stores and laying off 2,250 workers. Coincidentally, also on Thursday, Macy's announced a restructuring that it will close 14 of its stores. Let's hope these moves are not indicative of retail performance over last year's holiday season. The loser for this week is World Wrestling Entertainment, ticker symbol WWE. Shares in the global entertainment company took another hit this week, losing a little over 4% to close at $11.35 on Wednesday. The drop comes amidst the announcement that the company's WWE network is now available in the UK and Ireland. World Wrestling Entertainment programming reaches more than 650 million homes worldwide in 35 languages. However, subscriber growth in the branded TV network has fallen well short of subscriber goals. Well, those are our winners and losers for this week, and now it's time to check in on the gains that you could have locked in by following the weekly watch list from Robert James and Viral Stocks. Okay, that's enough about this week. Now let's turn to Baystreet.ca's look at the week ahead and the snapshot of what analysts are forecasting for companies whose earnings reports are coming out next week. Here are 3 U.S. stocks to watch. First up on Monday is Alcoa with an EPS forecast of 25 cents compared to 4 cents in the prior year quarter. Next up on Wednesday is JP Morgan Chase with an EPS forecast of $1.37 compared to $1.40 in the prior year quarter. According to some experts, Morgan took significant de-risking activity in 2014 to reduce its risk profile while growing its asset management business. Finally, on Friday is Goldman Sachs with an EPS forecast of $4.72 compared to $4.60 in the prior year quarter. And now here are 3 Canadian stocks to watch next week. First up on Monday is Shaw Communications Inc. with an EPS forecast of 53 cents compared to 51 cents in the prior year quarter. Next up on Tuesday is Cogeco Cable Inc. with an EPS forecast of $1.12 compared to $1.05 in the prior year quarter. And finally on Friday is Virginia Mines Inc. with an EPS forecast for a loss of 3 cents compared to a loss of 1 cent in the prior year quarter. A vote is to be held among Virginia shareholders on Monday, January 12th for a business combination with Osisko Gold Royalties Ltd, a move a number of experts are advising Virginia shareholders should accept. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure you subscribe to our YouTube channel or podcast on iTunes and find us on Facebook and on Twitter. For Vowel Network News and Baystreet.ca, I'm Hannah Bernard.